Good afternoon, everybody. This is Todd with the Daily Nitty Gritty Insiders video. We are at the end of another week and the beginning of a new month here in 2013. Hard to believe that we're already through with January, and now we're starting our next month here. Couple of interesting things today. This is Non-Farm Payroll Day, and generally non-farm payroll can cause the markets to really move, and we're seeing that certainly today across the board in the markets. Right now, the Dow Jones, NASDAQ, and S&P 500 are all up. Dow Jones is up more than 130 points. The gold is up about $11 to $16.73, and we've seen some big movements on the currency market as it's caused the market to move kind of all over the place. I wanted just to spend a few minutes here talking about this non-farm employment number. And the non-farm employment change is one where it measures the change in those people that are employed during the previous month from the previous month. And typically, we want that number to be better than what is forecasted. So if the employment numbers are growing, we're seeing expansion in a lot of areas. Job creation in of itself is really a leading indicator of consumer spending. People getting out and being optimistic with the markets. And the forecast today was 161,000. The actual number came in at 157,000. So it came in smaller or fewer than the forecast. And really, we've been pretty stagnant in job growth as far as this last year and whatnot. There hasn't been a lot of real big months. It's been pretty flat, and it's not negative. In 2009 and 2010, we saw negative growth or negative changes, but it's certainly not as high as what most people would like to see it being, in order to get the economy really to move the way that what we'd like it to move. Now, the other side of this is that the unemployment rate went back up to 7.9% from 7.8%, which was the forecast. The forecast was for that. And so we've seen it come down. It reached a high of 10.2 back in November of 2009. We're at 7.9 right now. So it is coming down, but certainly not at the levels that we saw it back in the early 2000s, mid 2000s, where it was down in the 4 and 5% range. In 2003, it got up to 6.4, but it skyrocketed in 2008 and is still fairly high. So that causes the market to be concerned. And so when we're talking about trading during non-farm payroll days, we can do a couple of things. We can simply wait for the markets to accept the news and see what's happening before we trade, or we avoid trading that. And on the heels of the FOMC statement, we have a couple of big announcements that came out this week. Now, when we are talking about trading the simple trading method, simple trading method. we want a couple things to occur. We want the market to be deliberate in its movement. If it's not deliberate, then we're going to have a harder time being successful with this. Non-farm payroll causes the market to be non-deliberate. And if we get the market moving in a non-deliberate fashion, it's harder to find good opportunities than if it's in a deliberate fashion where it's making some nice consistent movements. So take a look at the markets today. Make sure that you can kind of see what the news impact this week from the non-farm payroll to the FOMC and everything else, how it affected the market and the direction that things are going. And then on Monday, as we start the new week, the new month here, we're going to have a better idea of the direction that we should be looking to trade. So that's what we wanted to chat with you today about, is that some of the things to look at with non-farm. Be cautious, use smaller risk percentage amounts, position sizes when you're trading, and you should be okay. So until Monday, have a great weekend, everybody, and we'll be back to continue looking at the markets. Until then, take care, and we'll talk to you soon.